Representing the Office of Insurance Regulation, Stephen Parton. You're recognized.
Thank you, Mr. Chair. My name is Steve Parton. I'm the General Counsel for the Office of Insurance Regulation, and for better or for worse, have been asked by the Commissioner to handle all matters as they relate to title insurance. We believe this is a good bill, and it actually is consistent with Senator Bennett's free market status. What this actually does is introduce a great deal of deregulation and competition in the title insurance market. Under current law, the old DOI set rates by rule. That then delved and became part of our responsibility under the current legislation. I will tell you that DOI back in 1996 issued a data call. They hired an actuary. They did a study. The actuary indicated the rates were too high. That study was redone in 97, 98, 99, and when it came time for the department at that time to actually set a new rate, the industry came to the legislature. The legislature froze the rates as they were until 2002. And frankly, the rates that we have now have been the same for at least a decade, and will appear perhaps even 2 decades. Under current law, when a premium is paid by an insurer, 70% of that goes to the agent, and only 30% goes to the insurance company itself. A good way to look at title insurance, and title insurance is different than any other insurance, and the industry will tell you that. They tell me that all the time. Regular insurance is insurance against risk. Title insurance, however, is in the business of preventing and eliminating risk. That is done by the agent who is performing a service. That's why 70% of the premium actually goes to an agent. What they're doing is they're doing a title search, they're doing an examination, they're taking care of any objections that may be there for a title, so that at the end of the day, the insurance policy is ensuring a good title. It is the elimination of risk. The problem is, over the years, is that when a data call has been made for purposes of rate setting, participation, particularly by agents, has not been very good. So we don't have an accurate picture of what the actual costs are. What this bill proposes to do is to do 2 things. First of all, right now the rate is set so that every company charges the same. And the bottom line is, we all know that all companies have a different business model. They have different expenses, they have different losses, and one rate just logically does not fit all. We also learned as a result of testimony from the industry that in only 36% of the transactions are there title problems. Now what that means is there are 63, it's 36 from it, 64% of those transactions do not have problems. Now that in and of itself is a problem with a rate that fits everybody, and that the same service, the same 70% is going to the agent, because it means that there are 64% of the property buyers out there that are subsidizing, if you will, the work that has to be performed for only 36% of the other remaining transactions. So that's what we would call an unfairly discriminatory. But under the system we have now, that inevitably is what is going to be produced. So what this does is actually deregulate, if you will, the agent side of the title insurance business. It recognizes that what agents are actually doing is not selling insurance, as your typical agent is doing, but actually performing services to which they should get paid. And under the scheme that is outlined in this particular legislation, they're free to charge whatever the market will bear. Not an attempt to get rid of agents or do anything to title insurance. It actually is freeing up the agents to charge whatever the market will bear. What they have to do, and the only regulation that is in there for agents, is that they have to report what their fees and charges are to the office, so that we can publish it on a sort of Shop Florida title on the internet, so that people can go to that particular location, look at their particular county, see who the agents are and what those various charges are, so that again we can introduce competition into that particular market. We're also introducing through this bill competition in the insurers, because now the insurers are going to have to file for their rates. They're going to have to show us what their actual expenses are, what their losses are, and justify what they in fact are charging. And given that we believe that there is a difference, if you will, in the various business models, and that there are some that are more efficient than others, again, we should see a difference in rate among the companies, and again, introducing competition into the actual marketplace. So that's in essence what is being done here. The only regulation, again, with regards to the rates that this bill is about, is to say to agents, you cannot charge below cost. Interestingly enough, and historically, and before we got in the business of regulating insurance, the title insurance the way it is, the competition was so fierce that they were actually charging below what the costs were. And that got the title industry into trouble. So the one thing here we are saying is, in this particular bill, is that you cannot charge below what the costs are for the charges that you're actually dealing with. If you have any questions, I'd be happy to answer them.
Members, are there any questions for Mr. Parton?